In 1950, the median home sold in the United States cost $7,400 at a time, when the median income was $7,400. The average annual household income was $2,900. At the time, the average house only reflected slightly more than two-thirds of the average household income. As a result, it was not unreasonable to expect some people to pay off their mortgages in a matter of years, but they did not. Welcome to the Financial Flow. Please like and subscribe to our channel and turn on notifications to stay up on our latest videos. During the post-war period, interest rates were relatively low. Housing was simply not regarded as a major expense. Fast forward to today, and house prices have risen. Considering the pandemic, housing affordability has once again become a major issue. People are moving out of cities in search of better homes, fueled by a desire for more personal living space and the convenience of working from home. If we go back to the 1950s, there is one major issue that cannot be overlooked. The United States experienced the so-called era of white flight, because suburbs were perceived as safer places to live. The predominantly white middle class abandoned inner cities in favor of them. A few significant developments accelerated the entire process. It reduced the cost of housing. 2 decades later, in 1970, the average home in the United States was 17%, which is, of course, slightly higher than it was in the 1950s, but not by much. In fact, it only kept pace with inflation during this time. At this point, the median annual salary had nearly tripled to $8,700. This meant that the average house was worth less than twice the average household income, and many people were purchasing homes for less than their annual salaries. The reason for this was that there was more supply. The urban sprawl had already taken hold, and houses were springing up everywhere. Furthermore, the demand did not really follow. The population was two-thirds of what it is today, and the idea of investing in real estate wasn't exactly common. During the 1970s, cash rates were as high as 13%, making it difficult to keep a mortgage on the home you lived in. Real estate was simply a commodity that people valued and required, and it should still be expected to be reasonably priced. This all changed in the 1980s. However, this was the point at which real estate began to behave less like a commodity and more like an investment. In the 1980s, not much changed. People started looking to move back into cities, and proximity to city centers became a status symbol for certain suburbs. This was accelerated by a massive foreclosure sale following the 1981 recession. This was the beginning of a trend in which house price growth became completely independent of wage growth. After 3 decades, the median home value in the United States was more than 4 times the average salary. It was simple supply and demand. People wanted not only larger homes, but also homes closer to city centers or other amenities. The widespread use of 30-year mortgages, lower interest rates, higher incomes, and the finance industry's institutional push to write more loans increased demand. Was it all for the best? Shelter is a fundamental human right, and that shelter should be comfortable, adequate in size, and not in an inconvenient location. In many cities around the world, skyrocketing prices are threatening to put this basic right out of reach for most ordinary people. In other areas, average house prices increased by more than 20% just last year. This is especially strange given that it occurred during a global pandemic. In recent months, the property markets in their cities and most major city centers around the world have skyrocketed in price. There are approximately 6 different factors at work here. The first is that interest rates are low. This makes borrowing more money easier, giving people more financial clout in property sale negotiations, where they would normally be competing with others. The second point is that the largest stimulus packages in history have poured a flood of money into the economy, disproportionately into the hands of the wealthy, who will be able to use the extra cash as a down payment on a house. In Australia, the Australian government controversially allowed citizens to access their superannuation retirement accounts, equivalent to an American 401k, for up to 20,000 Australian dollars. That would have otherwise been stored until retirement. These withdrawals were intended to help struggling households that had lost their jobs through no fault of their own. Many people also used it to supplement their deposit savings. Surprisingly, In the months following the implementation of this policy, the average deposit required for young Australians to purchase their first home increased by $20,000 in major cities. The third factor is that people are genuinely interested in spending more money on a home. People are eager for new and bigger homes after being cooped up for nearly a year and a half. This means that people in a one-bedroom apartment may want to look into an apartment with a home office or a much larger space. People are saving more money, which is factor number 4. Saving the money for the down payment is one of the most difficult aspects of purchasing your first home or your first investment property. Because of the highest savings rate in the country, many households are beginning to overcome this barrier. The United States has not seen in decades. People are concerned about the future and whether they will have a job once government stimulus ends. So saving more money is the preferred option. However, a large portion of this savings is almost entirely unintentional. Not being able to go on vacation, eat out, or even spend a weekend wasting money at the mall has resulted in a lot more money being put into people's savings accounts, thanks to some pretty generous stimulus measures. This is money that can be used to make up the down payment. People are afraid to sell, which is the 5th factor. Conventional economic wisdom holds that as the price of a good rises, more market participants will be willing to sell that good at that higher price to meet demand. The issue here is that housing is a requirement. As we have seen, the real estate today blurs the distinction between an investment and a basic necessity. Both classifications have a tendency to skew the outcomes of our idealized little economic assumptions about market behavior. Higher house prices, as a human necessity, do not always compel people to sell their homes because they will have to buy back into the same market. Furthermore, this anxiety feeds on itself because there aren't many people selling. Those who do sell with the intention of buying a new home in the same market risk not being able to find a suitable home quickly enough. Perhaps we should start seeing property value appreciate in the same way that other commodities do, which isn't necessarily a bad thing. This has numerous advantages. For starters, those attempting to enter the property market do not face a moving target in which they must save more money just to keep up. It also does not prevent people from accumulating wealth by paying off their mortgages or investing in rental properties, as these will continue to generate cash flows. More consistent price appreciation implies that depreciation will be less severe during economic downturns. Furthermore, stable pricing allows you to avoid capital gains taxes where applicable. For those looking to sell their homes, people will be more willing to move between homes as their families grow. Property investors who do nothing but sit on their properties and wait for them to appreciate in value will lose money. Instead, invest that money in productive capital. The economy will benefit as a result. And as with regular commodities, money will flow to investors who add value to the market. If you convert a rundown house into a block of apartments, you get to profit from the value you created by providing people with a place to live that did not previously exist. This hypothetical is essentially the reality. But is this the ideal situation? It may be difficult to persuade the majority of homeowners that it is, but it's certainly not something that should be completely disregarded, especially when the alternative is a future where people consider themselves lucky to have a place to call home. This is unlikely to even be considered in the coming years. Thanks for watching. Don't forget to leave a like and subscribe to our channel for more content like this. Have a good one.